don't quit. Like quitting is losing. I think there's a Vince Lombardi quote my dad taught me that winners never quit and quitters never win. It's just true. If you quit, you don't win. Like if you never quit, then you're never going to lose, because quitting is literally the only thing that's losing to me.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. James, man, welcome so much to the show. I really appreciate you having here. I can't believe it's already been the 2 months since we had that chat at Raise Fest. And, I had the opportunity to see you speak at our Raise Masters retreat. I think it was last year in San Diego as well. My, how time flies. So I'm super excited to have you here. You have a ton of experience, CEO and founder of Stonehan Accountancy, and you've done quite a bit of stuff, background in real estate, finance, working in Big Four, institutional and family office experience, entrepreneurship. And we have a couple different topics that I think would be super valuable for the audience. And we're going to get into those, but what is the way that you like to introduce yourself? What are the things that you like to be known for? How would you describe, these are things that are top of mind today? Tell us a little about you and introduce yourself to the listeners.
Yeah, thanks for having me on, Steven. So I guess at my heart, I'm really an entrepreneur. And within entrepreneurship, I really have two verticals that I call it, is my accounting firm and then my real estate development and investment business, which has a bit of a family office flavor to it as well. And those two companies are Stonehan Accountancy, where we help a lot of real estate professionals, investors, syndicators, help minimize their taxes, make sure their fund is structured properly for taxes. And then we also assist with the bookkeeping, making sure all the books are balanced. Because when you're managing other people's money, you want to give it the time and attention instead of just not doing any accounting for that. And then on the capital side I moved up to Idaho about 4 years ago and have started buying some investment property around here, and closed 2 over the past 3 months or so, and working on scaling that business up a bunch. I'm in the middle of fund formation right now with counsel to take advantage of some of these opportunities I'm seeing in Idaho and the Mountain West region in general, kind of focused on smaller deals, some residential plays, some micro multifamily, and hospitality, some Airbnbs, some boutique hotels. I like to say, if it makes dollars, it makes sense.
I like that one. That's a good quote with your background. Certainly, if it makes dollars, It makes sense. Yeah, that's awesome. Again, like I said, I'm stoked to have you here. I think, you have some really cool accomplishments. I think one of the ones was CFO by 30. And how do you I think you like to say it, speed running through corporate America is the phrase, right? Tell us a little about that. I mean, CFO at 30, you've traveled a bunch, you have been at these different companies, and you had some fantastic mentors as well, from what I remember. So how did you get to CFO by 30?
So I'd really say it's really thanks to my accounting career. And I like to say speed running. I'm a gamer, and you always see people trying to speed run Mario or Zelda, and so that's where I got the terminology from. And I really just owe it to my accounting career. And when you're in public accounting, I was at a firm called Rothstein Cass, which got bought by the Big Four company KPMG. You're just exposed to so much, and you get close to a lot of the CFOs and of the clients you're working on. You get exposed to different industries. I was always in real estate, so I really specialized in real estate funds, which our practice was really good at, as alternative investments, private equity funds, and hedge funds. So I got to take my real estate experience with my family and combine it with this institutional way that people are doing things. And then so I've always told people, go back to grad school, get your MBA, or I got my master's in real estate development. It's a great way to kind of hit that reset button on your career. Oftentimes people say, if you're a CPA for so long, or you're just a CPA, you're pigeonholed. It's hard to move from back office to front office. Mm-hmm. But it's hard, but it's not impossible. And so with grad school, I was able to do that. And I was hired by one of my professors to come be the first employee and quickly got promoted to CFO within a year of doing that. And that was just a great learning experience. Did over $1 billion of loans, onboarded 1,400 LPs while I was there. And it was a great experience to see how a fund gets formed kind of from inception and scales rather quickly.
Yeah, it's cool because you really get to see what's valuable for investors or LPs like you're talking about, and all of the back end operations too. But also a lot of experience with family offices as well, right?
Yep. So I've been working on starting my own family office for the past few years and learning all the best technologies and tricks of the trade out there to help advise clients on best practices for like spend management or bill pay or treasury. Consolidated financials is something that I've been really passionate about for the past year or so, and did a big RFP and decided to go with Oracle NetSuite and move away from QuickBooks just because when you start paying for the enterprise level software per month per entity, it starts to be equivalent to the price of something that's more enterprise level and really built to handle, consolidations and high level reporting that family offices need.
Got it. So let's break this down because, as I was telling you before we we started going here and recording, that this is a newer topic to this podcast, and I think I got so excited about, like, holy cow, family offices when I first started learning about it, which probably sounds ridiculous to you because you've been in the trenches for a lot of years, but just thinking like, wow, like not only does this exist, but these are really the elite level of investing, elite level of having a whole structure and organization to manage your money, manage your wealth, like people to help that. So help break down what is a family office, and some high levels of maybe analogies or other ways to think about that, so that how would you explain this to someone that's brand new to hearing about this for the first time?
So one of the best stories I use to illustrate this is there's this hedge fund manager, I forget his name, but he got banned from trading other people's money by the SEC. And so he started his own company, SAC Capital, I believe, which just manages his own money. And so really what a family office is something that has put some structure around investing their own families themselves, maybe some relatives as well, money in a very similar way to the way a private equity or hedge fund would invest their money. When you're getting up to, let's say, you have $100 million of investable funds, well, just paying your average wealth manager a point is $1 million. For that $1 million, you could basically build out your whole back office with investment professionals, accountants, attorneys, and instead of paying someone else that 1%, you pay it to staff that is solely and fully dedicated to working on you and your investment goals. And so this can take a lot of shapes and forms. There could be multi-family offices where a few families tend to come together to pool the resources in that way. It could be, a real estate family office where they're not trading securities, but really managing the whole wealth of a generation of real estate wealth creation. So it really runs the gamut. But at the end of the day, a family office is a group of people or professionals or a family that's put together a system to invest the family's wealth for their benefit, usually with more dedicated and eyes-on expertise than going with another outsider who has like 10 to 100 different clients.
Got it. So if you have that amount of capital, that amount of wealth, then you might as well just build your own entity with all those professionals to do it for you.
Yeah, exactly. That's kind of the idea of what a family office is. And, some can be, super well established with billions of dollars, or there could be other ones as small as like 10 to $50 million as well.
Okay. So I think what's interesting about that too, and I want to hear about how you were thinking about putting together yours, is, many people are, I'd like to build, journeys, investor journeys, customer journeys, all these types of things. I think about like, okay, man, James, like family office, like what are the milestones that listeners or people that are like really serious about investing, what do they need to get to, like, before they are thinking about their family office, or where you are at right now, starting to build or having been building yours? So, you said it could be smaller ones of like 10 to 15 million as an example. Is this investable capital?
Yeah, or just like AUM for lack of a better word. Let's say like you have a small real estate portfolio that can get there, similar to, like I said, of hiring a hedge fund or a not hedge fund, sorry, like a wealth manager to manage your money. Like a lot of times, if you have enough of your own real estate, you'll bring property management in house. So
Mm-hmm.
that could be a form of a family office structure for a real estate conglomerate.
Cool. And then you said a multi-family office as well.
Yeah, so that's kind of like what I'm building, where I'm setting this up for me and my family, but I've done it in a way where I have a CPA, I have a CPA firm. We
Mm-hmm.
can build upon what we've learned and offer that to other families as assistance for them to help navigate the waters, because it's really complicated out there. There's a lot of schemes, a lot of strategies. There's a lot of people selling a lot of products all the time. Um, and so I feel like it's a really unique place for me to help bring this experience into other people who are looking to create something similar.
Okay, awesome. So, like you said, building a multi family office so that other people who are interested in doing that too can is partner the correct verbiage here to partner to this or bring it into the same same office? How would you describe what that
So for me,
relationship
I
looks
would
like?
look at it more as like a client relationship. Other people, might actually do a partnership where they say like, okay, let's set this up, let's split costs, let's hire someone, let's, JV this, I own 50, you own 50, and we'll pay for, the overhead to manage both of our wealths, because maybe someone's at 10, someone's at 15,
Mm-hmm.
and it doesn't start to make sense to hire someone, but if they club it up, for lack of a better word, when it's few people, then creating like an actual structure where they have ownership of it is when it really becomes more of a multifamily office,
Mm-hmm.
but with the owners. And then they could be like the multifamily office, like I'm doing, where it's more of like a service provider approach.
Okay. So tell me more about that. So you're doing it from more of a service provider approach. So do clients that are coming to you, do they have, is this what one of their goals were already? Or is this you walking them through, like, this is how they actually do the setup and, all of the tactics as well? Like, did they already know that this is a thing that they should be doing? Or was it, oh man, that's a great idea, we should go to James for that?
Good question. I'd say maybe it's a little bit of both. People only know what they know, and maybe they have some ideas of what they want to do, and they bring it to
Sure.
me, and we discuss it. I really like to get into legacy and succession planning as well too. That's something that's really important to me. Like a lot of people who are in that, like, $10 to $50 million range, they usually made it through like an operating company, which could be something like as like furniture selling, for lack of a better comparison, or appliance sales.
Sure.
Like they could have made money in a way that's not in the investment industry, but they still have the level of wealth that should be treated like a family office. And so we go over a lot of, like I said, legacy planning. Does that lead to charitable foundations, nonprofits? Like, do they want to leave a legacy? What do they want to leave to their kids, if anything? I've heard a lot of mixed thoughts around that. Have a lot of different, personal anecdotes around that as well too. I've seen the good and the bad on both sides of that. Um, and then, like I said, entity structuring, I like to say you really want to have one of each food group, because there's different tax benefits to different corporate structures. So I'm saying you got to have like one LLC or partnership, one S-Corp, one C corporation. There's actually some great benefits of having C corporations. Then you got to have a couple different types of trust, depending on what level you're at. And then if you're into charitable, maybe you're just doing something as easy as donor advised funds,
Mhm.
or setting up your own actual formal entity like a foundation or 501c3 nonprofit.
Got it. So yeah, that's like so one of each of those. What are some of the categories of the different food groups? Because you mentioned a bunch of different things there, like the LLCs, the Cs, et cetera. Wouldn't those all just be classified as entities? But then things like the DAFs, the that would be a different type. So can you name off some of the different food groups?
Yeah, I was trying to maybe use those entities as different food groups, but maybe with more examples, like and I'm going to come from like an investment management background from real estate, is like your S-Corp, for example, we'll go back to the entities, like is usually going to be your management company that you're running things like fees and ordinary income through. And then C corporations, those are ones where you actually want to use those as expense entities, because owners can get a lot of fringe benefits from being employees and owners of C corporations. Such, for example, is like where health insurance paid to a C corp owner is not taxable versus with an S corp. It is, but then you pick it up as a deduction, so it's a wash. Anyways, that's in the weeds. And then you want to have most of your assets held through some sort of partnership structure. And then anything you're doing for legacy planning, and starting to maybe move things around for estate purposes later in your life, that's when you want to start to use trusts or some of the more legacy type charities. Like I have a friend who his family set up like a charity where they're going to meet every quarter and decide on how to distribute funds. And it's going to be a way for like the family to get together because they're living all over different states now, and a way for the family to really respect the wealth that's been created and use it in fruitful ways.
Yeah, that's really cool, especially for the family to come together, like you said, to have those meetings around is that considered a business purpose or like a giving purpose, but there's some kind of,
Yeah.
How would you describe that if they're coming together for like a nonprofit?
Well, I mean, it's an expense to the nonprofit. So
Okay.
you could run, if they're, boards of directors and officers of the nonprofit, then their flights to and from the meeting, would get run through the nonprofit's financials, and nonprofit would take in revenue as charitable contributions, and then usually there's some admin expense, and then they give out most of them. Depends on who it is. Like if some of these Doge foundations are involved, maybe it's like a 90%. The Doge Found administrations like USA, maybe some NGOs are like spending 90% on admin, and their founders are buying houses and mansions in Topanga Canyon, versus when wealthy people are doing it, they've already earned the money, and maybe there are some great tax benefits for setting these things up, but they usually have a philanthropic goal in mind with it.
One of the things I know you're passionate about talking about here too, you're talking about succession planning, but there's is without proper planning, your wealth will become eroded, right? So we want to be able to prevent that erosion of wealth. And so you named off a couple of them already. Are there other things that you would say for a new client that's coming to you, here are the things that we need to make sure that not only do we set up, but principles or things that they can be doing as well and thinking about to prevent that erosion of wealth?
Yeah, we have a whole kind of checklist we go through of like what they want their legacy to be. Like if they just want to say like, screw it, we're gonna sell it all and go cruise the world for the rest of our life, like that's an option. And like, okay, like, well, you have all this real estate that you're actively managing. How do we get you out of this situation to something that's like actually truly passive? So we really want to understand their goals first. And then I feel like succession planning, at least for small business owners who are family minded, who like have that idea of like, oh, I want my son to work for the company. That comes down to leadership at a fatherhood level, like directly with the kids, and making sure they're involved from the business from as young of age as possible, to try to get at least one excited and continuing the legacy. Everyone's free to go do their own thing, but I feel like working in a family business with the family is one of the more rewarding things, because you spend most of your time in your life these days, like, well, used to before COVID, in an office around coworkers, and like the coworkers become the people you spend the most of your time with. And like if you want to spend time with your family, then you should be working with your family, because if that's where you're spending most of your time, then you should find ways to incorporate that, take a leadership role. And maybe your kids, and you analyze their strengths and weaknesses, and maybe there's different departments within the company that they can get into, or maybe they just want to go be an artist and go to Burning Man every year. I don't know.
Yeah, different personalities for sure. In your experience, I mean, you named off a couple of those already, which is maybe some kids, there's leadership things where they might want to take that role. Maybe some want to do, the SEO for the company, or, maybe really loves talking to people and building relationships, and it's some kind of sales role or whatever. How have you been exposed to, do you have any stories or other examples you can think of, like, you brought up an interesting point. It's really kind of a fatherhood leadership thing to bring your family into the business as well. Like, have you heard of any stories where, kids are completely reluctant to do it, to come in, and they want to be that Burning Man kid? Or
Oh yeah,
how do you bring
absolutely.
your children into the business? That's what I'm ask.
It boggles my mind how many people don't do it, and I feel like it's the exception to the rule these days, where you see multi-generational companies being planned that way. I think it's a beautiful thing when it happens, but more and more you're seeing out there, and this is talked about a lot, like with the Cody Sanchez's of the world, talking about the great business buying opportunity right now, because a lot of the boomer generations have created these businesses that they have zero succession plan for. And there's a lot of opportunity for entrepreneurs out there to go out and, instead of having to create a business, go get an SBA loan and buy one of these businesses. Try to work in that industry first. Don't buy something that you don't know nothing about, otherwise you'll lose it all quite quickly.
Yeah.
But I think the lack of succession planning is prevalent across small businesses across America, but that leads to opportunities for others. So those are just kind of things we'll talk through with our clients of how they want to move forward with their life and where they're at right now.
What are your thoughts on, I don't know how true this stat is, or I don't know the stat, but I heard things such as most families' wealth are gone like one generation away, or like 2 generations away.
By the 3rd generation is usually what people say.
Yeah, something like that. So, when you're thinking of doing succession and wealth generation preservation, how meaningful is some of the wealth generation preservation if most of these families are losing it by their 3rd generation anyway?
It's incredibly important, and if you don't do this, you pretty much will use it and lose it. Sorry. And you have to think about like how wealth transfers down. Like back in biblical days, all of it would go to the firstborn son, and that kept a concentration of wealth with one person. In this day and age, it's often common to split it equally amongst the children. So, everything has economies of scale, and more money leads to more economies of scale. And when you start to split that, 3, 4, 5 times, once to the 2nd generation, then maybe, again, 10 times to the next generation, like a $1 billion estate, and then we'll get into the tax thing here, could go down to, like $10 to $50 million to the grandkids, after taxes. So that's still, don't get me wrong, a great chunk of money. But someone with $10 to $50 million does not have the same amount of power or economic opportunities as someone with $1 billion.
Totally.
So trying to create structures that consolidate that wealth, so people can't spend the principal. So like, let's say like instead of, not, and I'm going to use bad numbers here. Instead of like everyone getting their share of $1 billion, that $1 billion goes into a trust, and they get like, it'll trickle out and dilute out over time, but it'll be a nice like backstop income for people to never be destitute if they're just, taking the income and not the principal out of a vehicle like that. So I'm getting back to something I alluded to, like estate taxes are a killer. Like estate taxes are 40%. Right now you get an exemption up to about $26 million. Then anything over that is taxed at 40%. And that's really like what is in your estate when you die. And so some of the biggest tools people are using is they're using these vehicles called trusts, and trusts are just, they're some of the craziest legal entities out there. They're basically formed by like paperwork, and instead of having owners or employees, you have grantors, the people who contributed the money to a trust. You have the trustees, the people who are responsible for overseeing the trust, and you have the beneficiaries, the people who get the money from the trust. And so that's like moving stuff out of your name into the trust name. It's like, oh, I don't own this, it's in a trust with a separate trustee. There's this like big company in Nevada, and they do what the trust document says, but I can hire and fire them whenever I want and change the trustee around. But I don't own it. No, I don't own it. It's in a trust. Don't tax me on it. So
Yeah.
it's honestly baffling, weird paper shuffling game at the end of the day. Like, oh, I don't own it. It's all my trust. And those are like great things for asset protection, for protecting against kids marrying bad spouses who want to take all the money. And like I said, estate taxes, because, oh, it's not in my name. It's in this, trust. And trusts I like the most are a lot of the time are dynasty trusts, where it sits outside the estate. This thing can still grow in wealth. You can actually think about your trust as an LP that your family office is managing the money of, in a way, and you grow all the assets outside of your estate, and it's in your trust, and this is what gets passed down, and it's outside of that estate tax jurisdiction. You have to be careful with the way you structure it so it doesn't get hit with generation skipping tax, GST. And I work with some great attorneys who form these companies for some of the biggest families in America.
That's kind of crazy. I love the tech, how technical it can really get in its own right.
It gets so crazy technical. Yeah, I like to say the tax code is a mile wide of all the different categories, and every category is a mile deep as well.
Nice. So you said that was a dynasty trust?
Yeah, it's not technically like an IRS is called a dynasty trust. It's usually like an irrevocable trust or an intentionally defective grantor trust, which way too in the weeds to get into on a call like this, but
yeah,
there are so many structures out there, and it's been a great learning experience for me to go through for the past few years.
So is that only something, I want to ask the questions like, the who, what, where, and when type of stuff. So who's the right people to even thinking about, using that kind of stuff? Does it, if someone amasses, over their lifetime, who is, 35, 40 years old, who's listening right now and makes a bunch of LP investments, and those double, and maybe it ultimately gets somewhere around, let's say 6 million. Is it worth it for them to go and dig into learning about these trusts and use it for their wealth preservation too, or do they need more?
I think when you start to get outside of that exemption level, like I said, it's about $26 million for a married couple right now. Once your estate starts to exceed that is when these advanced trust techniques can start to come into play. Now, that's not to say they shouldn't do anything. Those high net worth tech people, like that $5 to $10 million net worth range, depending on what state you're in, generally you want to have a revocable living trust to hold all your assets through. That gives you zero asset protection. That gives you zero tax benefits. That is 100% strictly to avoid probate. With a revocable living trust, it takes the place of a will, and you can basically say like who gets what via the trust. There's no separate tax return. It's all reported on your own return. And that's just like a very simple thing that most people should do is like, depending on what your structure is and who you are, and if you're an employer or not, generally you want, your revocable living trust, then you want a holding company LLC, generally in Wyoming, and you make all your LP investments through that LLC that's owned by your revocable living trust. If you're doing more advanced stuff, you're a small business owner, you're running your own company, then you'll have a whole, usually S-Corp chain to that as well. And you don't want to mix streams, keep all your assets in a non-corporate vehicle. And then anything that usually will have active income subject to self-employment. New York and New Jersey do not apply because those states tax their people to death. You want to run a lot of your operations for active businesses out of an S corporation.
I will be listening to this again. First of all, and second, it's there's a lot there. I mean, what would you say for people that are want to build a plan for themselves? Like, who would they go to get some? What type of people should they be reaching out to for their own situation. Obviously, I know that you're looking for investors too, but if they're looking to do their first or second or maybe third type of LP investment, these probably not the level of depth that you'll be going down with them, right?
Yeah, we offer tax consulting packages starting at $6,000 where we go in and analyze all their holdings and see how they can do things more efficiently. One thing that I really highly recommend to people, and real estate when you own it yourself is not a passive investment usually, is there is something, with the short-term rental loophole that is legit. And if you're a high tech or a high income tech earner, buying one of these, like maybe your spouse can manage it, is a great way to save a lot of money on taxes. Like, the Airbnb industry did get hit a little bit, buyer beware, but there's some major tax benefits you can get from the short-term rental loophole where you actually manage it yourself. Above and beyond that, what my family has done is my wife has gotten her real estate license. As I have more and more CPA hours, I can't qualify for this awesome tax loophole called the real estate professional status. But since I can't qualify because I have too many CPA hours, my wife can qualify because it's her only, part-time job helping to manage the properties.
Mm-hmm.
So looking into kind of how the family can all help together with kind of their careers and their roles. Whereas like I have a lot of clients who, just because their spouse works in real estate, they save more money on taxes than she can earn in any other job.
Crazy.
Yeah.
Yeah. So tell me about that. Taxation is theft. Is that one of the ways you think about taxation is theft?
Absolutely. I think it's just a bane on productivity. I despite me having a CPA firm that earns money doing taxes, I was a huge fan of a lot of this noise about getting rid of the IRS and replacing it with the External Revenue Service. Before the IRS in 1913, this whole country was funded by tariffs. We had a military back then, or roads. I don't think people forget about that. And I'm a big fan of it. But that's what I do, and what I'm passionate about with my CPA firm is using a lot of these advanced techniques I know to really move the needle against the government taking money from the citizens and keeping more money in my clients' pockets.
Yeah. And as an entrepreneur, of course you would want to know those things because you kind of get the growth mindset where you have the growth mindset aspect of entrepreneur, but also knowing like you're saying, not only tax code, but the rules and how to bend, work with them well, right?
Yeah, there's a great CPA, Tom Wheelhouse, who says, if you want to change your tax, change your facts. And, you can't just go in and say, oh, yeah, I'm doing this, that, whatever. You actually have to do this, that, and whatever. Like I said, to actually qualify as a real estate professional, my wife is tracking her hours. She's getting her license. She took the classes, we're like walking like a duck, talking like a duck, swimming like a duck. So if they look at us, oh, that's a duck, like you really have to be living what you're doing when you do it. And so when you understand the tax code, you can set your life up in a way to help minimize taxes. I think real estate's the best way to do it because I think it's similarly a great wealth generation vehicle. And then one thing I also like to say is, like, if someone's like basically not paying tax because they've taken advantage of depreciation or short-term rental loopholes, they're compounding their wealth 40% faster than the next guy who's paying out federal and state taxes about that rate. Just from an entrepreneur and growth perspective, not paying taxes gives you more capital to invest back in your business, which gives you more deductions, which allows you to have more money in your pocket to put back in your business. And it just helps really accelerate the cycle when you can learn how to minimize your tax burden legally, given the code that this political elite establishment has given us.
So what you're saying is no one should be using TurboTax. Everyone should have their own accountant. And
I mean, if you're just like a W-2 guy, like TurboTax is just fine. But once you start to invest in things, like if you're investing in LPs, a lot of times those generate state K-1s, and those can be complicated, and TurboTax isn't usually well equipped to handle those.
Right.
It depends. Like, I'd say, like, if you have very minimal activity, W-2, maybe one Schedule C even, you can just do TurboTax. You can learn online enough. Don't take if something sounds too good to be true, it usually is. Like,
Yeah.
haircut's not deductible unless you like run a movie studio and have to provide hair and makeup. There's always exceptions. Clothing's not deductible unless it's a uniform you can't wear anywhere else, or like a costume for a play.
Yeah.
So there's general hardline rules, but even those have exceptions to it. Like, the one that always gets talked about the most in the real estate industry is like personal and cosmetic care. Like I said, haircuts are not deductible unless they really have a business use. So the one that always gets thrown around is the stripper said, I want to go get like these bolt-on huge fake tits, and like it's for my business. And I was like, okay, well, when you're done stripping, you have to take them out. And so she did. She had him in for 5 years or whatever, had her career, and then took him out. I was like, okay, that was an honest deduction because it was solely for business use. So it's really extreme cases where you start to see the exceptions to the rule. And there's a lot of court cases out there. And usually someone's tried it before you. Like, just do a little, tax research. There's plenty of tools out there to do yourself now, or that's what we do for our clients is, like, hey, I want to write off a lot of my jujitsu training. I'm like, he's like, I'm a security, like I run security for my own business. I'm like, okay, well, let's go add some belts and suspenders and maybe get a, client or two for that business, and go get your security guard license, and like really show the facts to substantiate what you want to do for your tax.
What was that quote again that you said? It was something know your.
Oh, if you want to change your tax, change your facts.
You want to change your tax, change your facts.
Yeah.
Got it. Another one I've heard was it's not asking, is this deductible, but how do I make this deductible?
Exactly
that question. And it kind of sounds like that's what you're talking about there too.
Yeah. Like, I don't know, people get these BS theories like, oh, I'll throw a company logo wrap around my car and now my car is all deductible. I'm like, that's not exactly how it works. It's like, okay, that wrap expense, that's an advertising expense. But then your business but your car business expense has like a lot of rules around it, where you can only take the percent you actually drive for business as a deduction. Then you have to track your miles either way, and then you either do the mileage reimbursement or you do like the percent of miles for business times your actual expenses and depreciation. So like, you get a lot of these TikTok advices that just like fly by for the viral clip, but like us nerds with the glasses that like, okay, well, actually, you gotta carry the two and make sure that you're using Mile IQ and tracking your miles and blah 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 whatever.
Yeah. I mean, you got to get those rules out there. It's content, James, right?
Yeah.
Yeah. I mean, it's totally worth it. Like, taxes is one of the biggest expenses, right? Would you say
taxes,
it's the biggest or one of the?
Taxes and divorce are your two biggest expenses. And usually taxes are higher because they're hitting you half for every year. And, the divorce is half just once or more times. Hopefully never, but that those are the two biggest expenses out there. I don't have any advice for the divorce side.
Well, I was about to pivot to this next topic, so let's do this. One of the things that I have on here is being a Christian businessman in the secular world, and I'm so grateful that you gave me the stripper example as one of the opportunities there. But I think this is a really interesting topic because really how I usually like to dive into, whoever I'm talking to is, what are the things that kind of drive you and your values as well. I think that there's so much to that, not just talking about, wealth and these strategies and how to do this, et cetera. But I mean, you talked about, for those listening, and I have a lot of male audience too, that's in tech, that's building and thinking about what am I going to do for my family? What am I going to do for, freedom, what that's about too. And I know you have things that you like to talk about from a freedom perspective, but also I think this is interesting from a values perspective. So what has your experience been, being Christian businessman in the secular world? Like, what does that mean to you? Like, how do you do things differently?
I think what that boils down to is like, it's not always like profit first motivated. Like maybe I could, fire a bunch of people and hire people for 40% less, but sometimes hard business decisions have to be made. But I was talking to another one of my Christian business partners about how, we view it as like, we've been blessed by God with these skills or circumstances in life. Like, we've been blessed to be a blessing, and that's the Abrahamic covenant. And, he runs a Bible study, which is really cool. And a lot of people, coming out of maybe bad situations, go there, find Jesus, and then he has a fully integrated GC company where he's able to offer people a lot of employment. And so this is something I've talked to other business owners about, is like, as you start to scale up and bring employees, it's not just about you and your family. Now you're helping to feed the mouths of multiple people and multiple families. And so that leads to a great deal amount of responsibility, which I think is very valuable. Like, I think Jordan Peterson said, the more responsibility you have, the more meaning your life has.
Sure.
And I think about that a lot as an entrepreneur and a business owner. Is I'm working not just for myself, but like, there's a lot of mouths to feed across the business.
Absolutely.
And it's one of the more inspiring things to make me want to work harder and grow the business, so I can get a path to a lot of different people. I hire some people in the Philippines and try to pay them top of market, and so they can kind of live the best lives of anyone over there, making 5-10x the annual salary. And I'd love to hire more Americans too, and that's a lot of the reason why I want to drive growth for the business, is to be able to help these people have a career path and grow their salaries, and grow our business profits all together.
Yeah,
So
it provides so much more impact too, right? And
Yeah.
like, is more how did you say it? More responsibility, more meaning, but or in addition to that, it's really comes down to purpose too.
Yeah, absolutely.
Has your purpose expanded, or how has your purpose expanded over time? You talk about, people that you're hiring, you talk about different mouths to feed. One of your friends or business owners has not only their Bible study, but their general contracting, company as well, to provide, get tools in hands to build, give purpose, swing a hammer, or other things, of course, but as an example. But how is your purpose increased over time?
Gosh, I feel like it's been a lot of humbled over time, especially as I came to faith over the past 5 years. Kind of growing up in Southern California and LA, I always had kind of like the high flying dreams of wanting to own a yacht, and travel the world and all that. But over the past 5 years, I've gotten like really local based. I want to be a more positive member of the community. Like we throw farmers markets at one of our properties as a way for the community to foster small business and entrepreneurship for them and bring the community together for events every week. I'm just really more locally focused now than I was younger in my life.
But at the same time, you've given examples about also global awareness too, especially with companies that are overseas, Philippines and jobs, paying them top of market and having a path there too. Do you think that has expanded or brought you more awareness to be local when you had more of just a global mindset before?
That's an interesting point, and I'm glad you brought that up. I just feel it's the way like business is done. Like, my staff in the United States is all remote too. But that's just kind of like how my accounting firm business was built. Other businesses are going to be really local based, like local property management, like local running hotels. That's going to employ a local base, and I want to find more ways to spend my time in my community, like more than like I like to travel the world anymore. Like I did that. I was blessed to do that when I was really younger, had a lot of opportunities in my 20s. But I honestly don't like leaving Idaho that much right now. It's like I've set myself up with a awesome life here. We've got a farm, love my wife. We have a great life together. And it's just a matter of like how I feel like accounting firms are run right now, that everyone's spread out. There's not that great of a talent base for local hires here in Coeur d'Alene, unfortunately. But I would like to, have an office that will maybe go into 2 or 3 times a week with some local people. But it's just a matter of time and scale to get there.
Yeah, definitely. Are there certain other principles? So what types of principles have you been thinking about, been top of mind recently, that help guide some principles that or decisions that you have been making? I'll kind of stop there. What principles have been top of mind for you?
I think kindness and fairness are some of the ones that have been top of mind. I just feel like there's too many horror stories of people in corporate America getting yelled at. So like I wanna be a good boss. Like I don't want to get walked all over. Um, I have a small story on that where like one of the guys I hired in the Philippines, I advanced him some money for some medical care for his family, like right when he started too. And like 2 or 3 months into it, like he just kept asking for more money and his work was bad. And I just had to let him go. And like I gave him so many opportunities and, put the money up first, hoping it would work out. If it works out, I'll get a really loyal guy. If not, then oh well, it's just a couple grand in the scheme of things.
Sure. And finally, I have this other question, which is, from Christian perspective, biblical perspective, I'm curious what is your thinking in relation to money? Like you said, we've been blessed by getting good income, good skills, good opportunity to create more of this for other people around. But do you look at yourself as I've heard of looking at the money that we have as just stewards of this for the time? Has that changed the way that you make money decisions as well? And also from a giving perspective too?
Yeah, I've definitely adopted that stewardship mindset. It's all God's money. It's just ours for a time to use it while we're here. And I think that same idea as stewardship ties back in with the family office approach of how like good family offices are stewards of the family's money, which I also think goes back to the great Christian principles of how you should look at it. I think what quote do I want to go? Like the love of money is the root of all evil. Like you can't serve two masters, God and money. And so if you're able to see like money is just a tool, it's just like an energy source that flows around. Like it's just point after a certain level of your needs are met, it's just points on the scoreboard.
Yeah, for sure. Well, James, I appreciate spending time with you here. I know we covered a lot of stuff. I want to be respectful of your time. There's other topics I would love to have dove more into, but I think really kind of telling the audience a bit about not only family offices, but giving some a quick master class about the different entities to look into, and make sure that people are going out to either reaching out to you or doing some of their own research too about how they are planning how to reduce their taxes and so forth. I appreciate all the sharings that you everything you've shared. Is there anything else that you would want to mention? Any parting words before you kind of talk about how people can reach out to you?
Yeah, maybe we can do an episode 2 together in a couple months when I have some more new things to talk about. One other thing that's just like been on my mind lately on all the podcasts where I was like, don't quit. Like quitting is losing. I think there's a Vince Lombardi quote my dad taught me that winners never quit and quitters never win. It's just true. If you quit, you don't win. Like if you like never quit, then you're never gonna lose, because quitting is literally the only thing that's losing to me. So that's just some parting wisdom. And then how people can get a hold of me is I'm active on LinkedIn, James Bohan, CPA MRED. And then my website is stonehan.com, stone like a rock, Han like Han Solo. You can get in touch with me there. James Bohan CFO on Instagram. And thanks again for having me on, Steven. Hope some people were able to learn some stuff today.
Yeah, absolutely. I'll make sure all the links are in the show notes as well to go there and reach out to your links. Thank you, sir. Appreciate it.
Thanks, Steven. Take care.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.